It's like the gold and silver markets seem to be playing by a new set of rules, as far as I'm concerned. And Zoltan Pozar was dead freaking on when he said that we're entering a new system where it will be all about commodities. And I would say that commodities are becoming more valuable than currency. He who has the gold makes the rules. Well, he who has the gold, the silver, the rare earth metals, the copper, the lithium, the uranium, soft commodities, the food, the shipping lanes, they make the rules. And I think that's I think the West has lost control of being able to hold down the paper price the way they once did. In years past, Chris, and you and I have suffered through it when silver squeeze is a prime example. I mean, I'll never forget that weekend. I mean, I never worked that hard in my life. I was staying up 22 hours a day, working nonstop to keep up. I figured I've never seen anything like this. How can I go to sleep? Give me more coffee. And then bang, they just crush it right back down again. And that was what, February 2021. Here we are, 3 years later and it's just now getting back. So it's different this time. Is it? Sure feels that way. It feels very, very much different to me. And I just think that what you are seeing is a set of rules that are now moving towards, the real thing and the acquisition of the real thing. I find it interesting that there's been a lot of talk about the bullion bankers visiting the Shanghai Metals Exchange. And I went onto their website, and you can see for 4 straight weeks, starting the second week in March, you first had Deutsche Bank, then HSBC, then JP Morgan, and then Standard Chartered Bank all show up there. And the question is, why? Could it be a coincidence that you're beginning to see since that day, if you look at the numbers on the Shanghai Metals Exchange since the second week in March, their silver inventories are going straight down. Did they strike a deal with the Chinese? Bail us out, please. We're naked short so much. We need your help. We can't find silver because, there's 800, according to the LBMA, there's 800 million ounces of silver there, of which 500 million belong to the ETFs, leaving only 300 million. Who knows how much of that is really true when it's an over-the-counter market with not great transparency, and you can write as many contracts against those bars as you want. That's the promissory notes. It's what they've done. It's what they're doing on COMEX, which is 1700% rehypothecated. And the silver inventories on COMEX have been bled down, and maybe they're trapped with these massive short positions. Who knows what deals were struck in the back rooms with the Chinese? Help us, we'll do anything, we'll give you gold, whatever it is. But it's true. I think that there are some very interesting things going on. And when you realize that you cannot export gold out of China, you have to deposit a gold bar, your own gold bar, into the Shanghai Metals Exchange before you can then export it. So this is all about silver. It's not about gold that these bankers are showing up. It's not about benevolence. They're showing up there, and it has to do with silver. And when you look at a country like India importing between 500 and 600 million ounces in the last 2.5 years, when you realize that, the COMEX inventory has 40 million ounces or so unregistered, which is rehypothecated 1,600%. When you realize the LBMA just came out and said their silver stockpile is the second lowest it's been in the 140-year history of the exchange, they're running out of ammunition. And that's the thing. When these bankers set up this deal to create this over-leveraged system, no one ever stood for delivery more than a few percent anyway. Certainly not a sovereign nation or in coordination, sovereign nations with intelligence and cunning and guile and wealth and sophistication. I mean, that's what they're doing. And I don't know, man, it just seems that things are starting to get really, really, really interesting in the metals market. And I would argue that the decades long-standing ability of the Western commercial banks to manage the price, I think it's ending. And the real flow of metal from west to east is happening. And what I find craziest about all of this is that there are very few people. You're one of them. Vince is one of them. I'm one of them. There aren't a lot of people who are who are talking about this, and the underestimation of the significance of this is insane to me. But it's happening in real time, and I think it's going to start to get really nuts here pretty quick, with the shortages of supply and these naked short positions. And I want to talk about our old friend Jeffrey Curry for a moment. I don't know if you saw the article that he came out with. I'm sure you probably did, as you see everything silver, but it's worth talking about, because remember, Jeffrey is the guy, when he was at Goldman Sachs, that famously said that the ETFs are the shorts, that the ETFs short the metal into the market to hedge the position. That was a faux pas of ridiculous proportions, because when you're holding someone's silver as a custodian, you're not hedging squat. They're risking the whole thing is a risk. They're hoping it goes higher. I hedge my position because I buy inventory to sell to people. I can't let it crash or I go out of business. But when you're a custodian and people are signing up to buy the metal that you hold for them, you're not hedging it. What you're doing is selling it into the market to create excess supply to manage the price. Well, he just came out and echoed a lot of the things that we've all been talking about for a long time. Did you see that article by chance? Well, he says the key difference between the current commodities rally and those of the past has to do with the changing nature of the petrodollars. Where have we heard that before? With major commodity producers no longer automatically recycling their dollar-denominated oil revenues back into U.S. treasuries. Where have we heard that before? He says it explains a lot why gold prices, and I would add silver, are as strong as they are. And what is the evidence of that is the emerging markets, the BRIC countries, all met with Saudi Arabia and other key participants in November of last year and discussed how they're going to trade with one another using local currencies. And then whatever it nets out in settling, they would settle in gold. Where have we heard that before? And he notes that both China and India are paying for oil in local currencies and others. And he thinks that Russian sanctions on Forex reserves mean we're unlikely to see a U.S. commodity deficit recycling playing out probably ever again. Where have we heard that before? We've been talking about this shit for 2 years on your site. And now Jeffrey Curry, who's, say what you want about him, working at the Carlyle Group and former head of commodity research at Goldman Sachs, he's at the head of the table. He knows everyone. And I think the takeaway was the last paragraph of the article, where it says Curry's confirmation of gold recycling. And again, and I would say it's not just gold, right? Gold is replacing the treasury bond for sure, but I would add silver, I would add oil, I would add base metals, I would add, all of these commodities that are integral. But gold is the key one. And a lot of us have a bad habit of saying gold and meaning everything, gold, silver, platinum. But anyways, he says Curry's confirmation of gold recycling of commodity surpluses means the de facto net settlement is gold. Let's not forget that the oil markets alone are roughly 12 to 15 times the size of the global gold market. So if indeed all of these countries are selling their goods for local currencies with one another, which they are, and we've seen a lot of evidence of that, and then netting out the excess in gold, in silver, in oil, in rare earths, in copper, in whatever the hell that it is destroying little by little the value of the dollar, both its settlement and reserve status. I hope this makes sense for people. But look, you got the M2 money supply up 14 times since 1980 and still silver at 60% of its high. It doesn't make sense unless it's been managed. And there was an article or a interview that I saw on Palisades Radio, a guy named David Jensen. It was fabulous. It was really, really good. And I want to give the guy credit because he inspired me to do some digging. But what he was talking about was that the LBMA trades 292 million ounces of silver per day and 20 million ounces of gold per day, right? You contrast that to the Shanghai Metals Exchange, where you have to deposit a bar first to trade it. They only trade 300,000 ounces a day, yet LBMA is trading 20 million. And he goes on to say that there was a survey done with the Bullion banks in 2011, which said the real number is 10 times that. Because if you sell 20 contracts and buy 10, the LBMA only publishes the net, which is 10. It was actually 30 that you traded. So if we take that to be gospel, that there's 10 times the amount that they're telling us, is probably more, that would mean that they're trading 200 million ounces of gold per day. And that would mean that they're trading 2.9 billion ounces of silver per day on the LBMA, which in other words, they're trading over 3.5 times global mine production per day on the LBMA. This is how you suppress the price, by overwhelming the system with paper contracts. And you know what's the COMEX? 1700% rehypothecated, overwhelm the system. But when you realize that the LBMA silver trading is only 3% of the gold trading in terms of dollar value, it's a tiny market, and you overwhelm it with paper, you can control the market until you get countries like India, who accumulate 600 million ounces, and China voraciously accumulating it. They understand what you've been saying forever. No one was listening. I did, but most didn't, and now they will. And you will go down, you know, as someone who saw it way early, that silver is the linchpin. And I didn't even really understand it back then. It is the linchpin of this whole system breaking apart, because it'll blow up the bullion banks, which will blow up the system. The bullion banks are the big commercial banks. It'll blow up the whole system. The lack of trust will have been shown to be of epidemic proportions. No one will ever trust us again. They won't trust the West. And I think that's exactly what is happening. This is why the banks are showing up in Shanghai begging for silver. If you can't export gold, you can only export silver. And we see massive deficits in both the COMEX and the LBMA in terms of stockpiles. Where are they going to get it to cover these short positions? And I think that's what you see happening. So I don't know, man. I think it's getting really crazy, Chris. I really do. And Jeffrey kind of illuminated it by, you know, saying, look, these countries have chosen to move away from the treasury and move to commodities. They're the ones who are buying the contracts that the stupid banks are naked shorting by creating these contracts. Well, now they want delivery. What's going to happen? Maybe they went there and begged them not to take delivery. Why did Janet Yellen go to Brazil, or begging them to buy treasuries? Why is Jamie Dimon in China right now? Is he begging? Don't blow up the silver market. Let's work out a deal. I don't know, but I think when you see arbitrage of $4 plus, it tells you that they're not making it easy, and I don't expect them to, and they're not doing this out of benevolence. There is a quid pro quo going on, and the bullion banks have to offer up something. And at some point, there'll be nothing left to offer up in a world where commodities rule and paper currencies don't. Right now, we're transitioning there. The dollar still has a great deal of value globally. But what happens when it doesn't? What happens when, no, we don't want it? Because, you know, the old saying, he who has the gold, I would say he who has the gold, the silver, the platinum, the palladium, the uranium, the rare earth metals, and the food, and the copper, they make the rules. And I think that's the transition that we see ourselves heading into.